Okay, Mr. Mike, this is the other Mr. Mike. I have decided to give you something for your entertainment. Here is the first draft of the Mambo presentation on how we're going to fix all the federal budget stuff and make ourselves heroes. So we will see how this works. I will try to figure out all this fancy share screen and record stuff. So cross your fingers. This will be amateur hour as far as doing a presentation, so don't judge too harshly. All right, hope this is working. Cover page, what is wrong and how to fix it. So I'll try to go through this fast. So just looking quickly at where we are now, these are numbers out of the 2021 federal budget. And if you look at the expenditure side, has all the things we spend our money on. And what it shows real quickly is that we have really four big hitters: Social Security, Medicare, Medicaid, and military related. And everything else is a whole bunch of little small programs. And so if we want to address the expenditure side of the house, we've got to go after those big four. And then on the revenue side, we've got a whole menagerie of different kinds of taxes. And the fundamental problem is we have all these social needs. So we want to go spend $4.8 trillion while our budget says we're only going to get $3.8 trillion. So we have this giant budget deficit, and what are we going to do about it? So our conundrum is that the government is spending too much money helping people, while at the same time, due to wealth inequality, the government is spending too little money helping people. So what are we going to do about it? So what this plan is all about, we'll start with the revenue side of the equation. And it's just too complicated. Ran across a thing that said the federal tax code, with all the explanations that you need to use the tax code, is 70,000 pages long. It's got so much complexity, it's just crazy. Everybody hates doing their taxes. A whole lot of people pay people money to do their taxes. Mountains of accountants get paid to do people's taxes. We have all these different kinds of taxes, and it's all been, for the last century almost, it's been this Band-Aid approach. Is when we come up with something new we want to spend money on, instead of adding to the current tax rates, we create a new tax. And that just makes everything less controlled and less systematic. And because the system is so complex, it is not very difficult to have unreported income. And there's various articles out there stating that we lose between 250 billion to $1 trillion a year of taxes that should be paid that aren't. And as a result, we're dealing with this $966 billion deficit, and that's just out of 2021. Okay, so I won't go through all the details on this slide. This one slide is kind of a nutshell thing of the whole revenue side of the equation. But we're going to take all the taxes that we have and we're going to replace them with three sources of revenue. A very simple wage tax that is administered like Social Security, where the money is just pulled out of your paycheck and you never see it, and the tax goes straight to the government. You don't even have to fill out a tax return. Then I used your business and occupation tax idea, and I wound up being able to set it at a 15% rate instead of the 20% rate that I thought at first. And that will bring in $1.5 trillion of revenue and be vastly simpler than the current business taxes that we have now that are based on net earnings. And then I would like to have a personal wealth tax that will only apply to the top 10%, with a marginal rate starting at 2% for the 90th percentile and scaling up to 10% for the 6 individuals who have wealth over $100 billion. So what I really see as the biggest benefit of this whole thing is what's down here in the lower left, to simplify the system. We're going to eliminate corporate earnings tax, capital gain tax, Social Security tax, Medicare tax, unemployment, estate, gift, and all the excise taxes. We're going to take this giant zoo of taxes that we have and just cut it down to these three that are very simple and easy to administer. And if you add up all the numbers from these taxes, they raise $5 trillion revenue versus what we're doing currently, which is 3.86. So even without any spending cuts, this plan would eliminate the current federal deficit. The other thing about the simplicity is, as far as IRS enforcement to make sure that the taxes get paid, because it's so simple, virtually all of the enforcement resources could be put on the top 10% and addressing this wealth tax issue, rather than all the income taxes that come from 100+ million Americans. And so bottom line here in the lower right is, if your net worth, for all the people, the 90% of people whose net worth is less than $1.2 million, they don't have to do anything to pay their taxes. The wage tax is paid by just having withdrawn out of your paycheck and you never see it. And the business and occupation tax is simply part of the price you pay for all the goods and services that you buy. So you do nothing to contribute those taxes, and it's vastly simpler than what we have now. So the wage tax, the way our current income tax is set up is there's no tax below $24,800. And here I'm just assuming that people are using the standard deduction. Marginal rates range from 10% at the bottom end up to 37% for those making over $600,000 a year. But there's different tax rates when you get into capital gains, and there's also all kinds of deductions that people can take for various things. In the proposed wage tax, what we're going to do is we're going to say there's no tax below, we're going to do the same thing, no tax below $24,800, a 10% marginal rate up to $68,400, which is the 50th percentile, that's the median point of income, 15% marginal rate up to 100,000, and 20% marginal rate above 100,000. That goes on out as far as it can. And the reason that these marginal rates were chosen is that they mirror very closely what the current tax rates are for wages up to about $175,000. And that's who this tax is primarily targeted at. And as you can see, when you get up above $175,000, those higher tax brackets start making the current income tax be a lot more. The other factor to this is, as you get out beyond about $250,000, the people that wealthy, they make more and more of their money out of capital gains, which will not be captured as the wealth tax or in the wage tax. That will be part of the wealth tax discussion. So this only applies to salary and wages. Ordinary income does not apply to selling stocks, capital gains, asset sales, all that sort of thing. So wage tax is just a very simple thing. It's administered like Social Security. There won't be single or married filing jointly head of household. There won't be exceptions, deductions, and adjustments. But that could be opened up. Do we want to give a guy with 5 kids something of a tax break? Do we want to have home interest in there? These are things that we can discuss. As it is right now, it's not proposed that way. And it roughly matches the current middle class tax rates. And the simple thing about it is it's just pulled out of your paycheck. You don't have to file an income tax return, and it would generate about $930 billion of revenue. So that's step one. Step two, the business tax, this is very much the model that you described to me, where I have all these different customers who come in and make purchases from my business. And all I do is I take 15% of that incoming money and I send it off to the federal government. I don't need to calculate all the profit, the loss, what appreciates, what depreciates. I don't have to do any of that. It's just very simple multiply by 0.15 and send it into the federal government. Vastly simpler than the net earnings taxes that we have now. And the tax is completely invisible to all the customers who are making the purchase. It's just part of the purchase price. And that will generate about $1.6 trillion of annual revenue if we take this 15% level. And like I said, I scaled up the Washington GDP up to the national scale, and that's how I got those numbers. So now, got two slides here on the wealth tax. So first of all, why have one? So the first curve is kind of a homemade curve, and don't worry about the waves in the curve. They have to do with, I had to arbitrarily make guesses at how much capital gains the wealthier people are taking. But generally, you've got this upward line. And we do have a progressive income tax system where a guy, this is the middle class, the 50th percentile at $68,000 a year, he pays about 7% of his income as taxes. And then when you get up to above $1 million a year, they're paying, 21, 22, 23% of their income as taxes. And like I said, more and more of their income becomes capital gains, so the tax rates actually drop as you get, out beyond $1 million a year. But it's a progressive thing where measured as a fraction of your income, your taxes do increase. But what's interesting, what if you measure the income tax as a percentage of your net worth? And it's kind of interesting because that actually goes the other way. The middle class guy is paying 4% of his net worth. A person, the 50th percentile in wealth, has a wealth of $121,000, and he pays about $4,800 in income tax. And that's, so he's paying about 4% of his total wealth as income tax. Then as you get wealthy, you're paying a smaller and smaller percentage of your net worth as income tax. And for some reason, at least the way I did it, it minimized out in between $375,000 and $500,000 a year. And then it comes back up slightly. But as a percentage of your net worth, the guys at the bottom are actually paying a higher tax rate. So this is how the wealth tax will work. So as I said, it starts right at 90%, and you're paying essentially nothing. And you're starting with a 2% marginal tax, and then it extends upward. So this is how it works. You see it rises. Well, it seems to rise steeply because the scale goes up to 100 million. But notice that up to about $6 million, you're paying less than 2% of your total wealth. So like here at the 97.5 percentile, this guy's making, or his net worth is $5.5 million, and his wealth tax would be $107,000. So it's only 1.9% of his wealth that he's actually paying. So this is heavily skewed to the top 2%, where they're going to pay the lion's share of this tax. Now, the chart only goes up to $100 million because there are people who make $100 billion. So this chart would go way, way, way out to the right if I was trying to accommodate everything. But anyway, it only applies to the top 10%. You've got this 2% marginal rate at 90% up to 10. Only the people making above $6 million are going to pay more than 2% of their wealth. And this is going to generate $2.5 trillion of revenue per year. And I just wanted to throw in this. Jeff Bezos has $197 billion. And so he's the top guy, and he would pay $18.7 billion, which seems like an awful lot, but he's probably making that much almost every year. If you look at what these wealth values are and what the people are paying, I think they can afford this without any damage to their lifestyle whatsoever. And I think this is quite justified, um, and brings a lot of fairness to the system. So we'll switch over to expenditures. Not going to drag you through the details of this chart. All I'm showing here, this is a breakdown, a pie chart of the entire federal budget, which I think you've seen before. And what it's showing you is that your big hitters are Social Security, Medicare, Medicaid, and then the Defense Department. These other mandatory programs are a whole slew of much smaller programs. Child nutrition, child care, federal retirement programs, Head Start programs, Pell Grants, student loans. You know, individually, they're all little tiny programs. And so as we have discussed, if we're going to get serious about attacking spending, we've got to go after these big four. Anyway, you can see it all there. So I made this chart up just for fun. I wanted to take taxation to an individual level. You got 200 million American adults, and on average, every single one of them makes the following payments. So you and I, each of us, are paying $5,700 to Social Security, $4,600 to military-related expenditures, $3,600 to Medicare, $2,200 to Medicaid, and $1,900 to interest on the debt. And so this is $18,000 per adult just for those four programs and the interest on the debt, and that's 80% of all the spending. And I'm sure I didn't capture everything on this chart, but if you add up these numbers, it's 95% of the total budget. And all the other things that people say, talk about all the bureaucracy and all the things that we're going to do. We got to reduce education. We don't want to spend so much money for NASA. We shouldn't spend so much money for student loans. We shouldn't spend so much money on the environment. Those are all chump change compared to these top five. And so that's where we got to go if we want to get serious about doing something with expenditures. So this is my chart that I made up to try to talk about the birthright plan that we talked about, which it's actually taken from an idea from a guy named Bill Ackman. But his was a much smaller version of this thing, and I wanted to build it up. So when you are born, there's two financial accounts established. One for $80,000 that you will be able to access when you're 18, and one for $40,000 that you can access when you are 60 or 65 to fund your retirement. Now, there's about 4 million births per year, and at $120,000 a piece, that's an outlay of about $500 billion per year. So at age 18, you can withdraw your $80,000 if you're making 7% a year, will have grown to about $270,000. And you can now pull it out and you can fund college, you can fund trade school, you can fund whatever it is you need to do to get started on your new life, your adult life, so that you don't have a kid from a poor family who turns 18, graduates high school, and has no money whatsoever trying to figure out where he's going to live, what he's going to do, how he's going to get a job. You have a foundation to start with. And then on the fund that starts out as $40,000, if it grows at 7% a year and you get to 60 years old, you'll have $2.32 million, which is going to be more than what you get out of Social Security nowadays. And as I said, if our gains, I just noted here what the gains would be if we don't achieve 7% interest rates. I think both these plans still work at something like a 5% gain per year. Now, the kicker to this is that you're going to go, oh, we don't want to go spend $500 billion. Current Social Security spending is $1.15 trillion a year. And if this program costs $500 billion per year, that's a net savings of $650 billion per year. And if you want to make a dent in spending, that's the kind of thing we've got to do. Now, there will be a cost because there's going to be a multi-year transition program to start switching over from Social Security to this. But if we can do that over the long haul, this becomes, I think it provides a better footing when you're 18, a better footing when you're 60, and it costs vastly less than Social Security does now. Then just, we got to do something about medical costs. The current United States medical costs per capita are twice what the average is of the other 30 other advanced nations. Surely we can do much better than this. Now, those 30 other nations have all different kinds of plans, and all of them are better than what we do. And, I just think we need to go, heck, I would go outsource this. I would go hire people from those other countries, tell them to look at the US national economy and develop a plan, and we just do it. Basically anything we do will be better than where we are now. And if we could reduce the cost by 30%, not even 50%, but 30%, that's a savings of $350 billion a year. And, that's just a matter of, we just have to get the will to do it. And then there's defense. We currently spend more on defense than the 731, I think, is just the Defense Department or portions of the defense budget. But when you add in all the defense related spending, it's $924 billion. And I cannot imagine that we could not cut that by $200 billion. So if you sum up the entire project, on the revenue changes, our wage tax will generate about $930 billion. The business tax will generate $1.6 trillion. The wealth tax will generate $2.5 trillion. So it winds up, actually, this is just about $5 billion, which is a revenue increase of $1.14 trillion a year. So as I said, without even any spending cuts, we balance the budget. And it is a vastly simplified system. There won't be any income tax returns. The business tax is just the price you pay. There won't be corporate tax or earnings tax returns. You'll eliminate all of these following kinds of tax. All the complication goes away. And I think that in itself will reduce a tremendous amount of the cost of the entire system. And then on the expenditure changes, we established the Birthright Fund, which will provide a lot of benefits and save $650 billion a year. Medicare and Medicaid, we have an opportunity for $350 billion a year. Defense-related spending, $200 billion a year. So let's just assume we could do that. That's an expenditure decrease of $1.2 trillion a year. So if you put it all together, if we're starting with a situation where we have a $966 billion deficit, if we increase our revenues by 1.14 trillion and we decrease our expenditures by 1.2 trillion, we're starting with a surplus of $1.347 trillion. So now we can start to look at, with that kind of budget system, now we can start to look at, we do have a lot of social needs that we need to address. There's obviously COVID, there's climate change, there's infrastructure, there's all these other things that we need to address. There's wealth inequality. So we do have real needs. At the same time, we want to control, but all of these taxes, we can just tweak the numbers up and down as we need to based on how much we finally decide to spend. So anyway, that's what I see in this plan as big hitters that would make a big difference. And I greatly appreciate all your help in putting this whole thing together and all the ideas and you listening to me. uh, so, but there are questions yet to be resolved. And this is where, you know, if anybody discusses this, I need help to figure this out. Probably the main thing I'm afraid of is that there are some loopholes in this, and there would be ways to move your money, manipulate your money around so that you don't get taxed at all. And so I would need help from somebody who understands, you know, an economist type person to make sure that our taxes are covering everybody and that people can't manipulate the system. Um, Next question is, are there some exemptions and deductions that we should retain? You know, should we keep the home mortgage deduction? If we keep a home mortgage deduction, should we have a rent deduction? Because I kind of don't like, we have a deduction if you own a home, but not if you rent, and that seems to be favoritism. But I'm okay with doing that. If that helps people buy houses, that's obviously a big thing in life. And then I wouldn't mind if, you know, child deductions, or if you're taking care of your grandparents, you get a deduction for that. But let's talk about that. Is there anything else that should be retained without getting into the myriad labyrinth that we've got now? You know, is there anything that I'm not seeing because I'm not an economist? Are there any unforeseen negative impacts? One point that was brought up to me was on this birthright fund. Maybe we don't want to just take an 18-year-old and say, here's $270,000, go start your life, because 18-year-olds are not the most responsible people in the world, and even 60-year-olds are not. And maybe instead of having a system where all that money is just dropped in their lap with no controls on how they spend it, maybe we give it out in portions so that you have to spend it gradually, you know, or maybe there's some kind of controls in how it's spent or something like that. But I think that is a legitimate thing that we have to think about. That I'm going to need independent verification on all the numbers. Everything was done with Google searches, and you know, it's very possible there are some mistakes. So you know, if anybody actually gets serious about looking at any of this, you know, I would want to get all the numbers verified. And then, is there anything else I'm missing? You know, that's entirely possible. The national economy is way beyond my knowledge area. So who knows what's going on? But anyway, that is all that there is. And so I appreciate you listening and putting up with me on all this. And have a good day. And we will talk to you later. Bye.